This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a fast look and brief look on the gold market. The gold market situation is changing slowly. So we see, yesterday we have said that market has hit resistance area, that is the 1250 resistance. Also this is monthly pivot resistance one and has formed pretty looking bearish engulfing pattern. As we know, the target of this pattern is the length of the bars, so if you count the distance of this bar to the downside, we could say that this market approximately has reached the target of this pattern. And theoretically, this is still possible that market really still could continue to move high by some reasons that we will see on the 4-hour time frame chart. We already have discussed it, but honestly speaking, guys, we do not care how it will happen. I mean the action to the downside. Whether market will start action to the downside right from this area, or it will show another spike up right to the neckline. As we think that really, this could be the neckline. Either market will reach this area and turn to the downside after that, because anyway our major level to watch for will be 1210, 1220 area. It's right here. Approximately the same bottom as here. This is the bottom of the right shoulder. Well, if market will show this move up, we probably will be a bit more lucky, since we will be able also take the short position, because right now we haven't taken it. Maybe some of you did, but we didn't mention it in our analysis that we could take the short position right here, but some reasons, as I said, that looks like the risk for the potential bearish position right now. Anyway, despite how it will happen, either from this area or after some spike up and move to the downside from this area, well, anyway, the major level that we will watch for will be right here. From that standpoint, current move down is not very significant. Well, maybe if market really now is forming the right shoulder, in this case we probably will have to adjust the neckline somewhere in that side, in this way. So maybe this will be a bit skewed, not horizon neckline. But again, as I said, that's probably a bit too early to do. We will leave it as it stands right now. If we will measure the harmonic swings, then probably we could say that market hasn't quite broken the harmonic swings yet in this move to the upside. So we can see that market has pretty room with potential retracement to the upside. Also take a look that action to the upside it's not bad. So this candle is really significant. So market opened on the low, close on the high. That's candles to the downside looks much smaller and in general more choppy. So if you take a look finally at the 4-hour time frame chart, we'll see that first of all we have this, as we have discussed, rising wedge patterns that potentially reversal, but normally wedge suggests 5 waves inside of it. It's normal wedge pattern. So 1, 2, 3, 4 and exit on the 5th wave. But the major reason why I think that market still has chance to show another move up is that, take a look, the minor extension targets 618 extension from that A, B, C bottom hasn't quite reached yet. So that is not normal when the market leaves some target behind. Also market hasn't quite touched the weekly pivot resistance one. So maybe personally I do not want to take the position in such circumstances, although also we see that this wedge is accompanied by the bearish divergence, because by two reasons. First of all, taking the short position is not the primary object for me, and the primary object, as I said, will be the area around 1210, 1218, where we need to extra carefully watch for the potential bullish reversal patterns on the intraday charts. Well, besides, if we will be right and market really will show another move to the upside to near around 1260, 1265 probably, in this case we still be able to take the short position. That's why I'm taking this risk with the stop somewhere above this area and a profit somewhere right here. It's not very attractive risk reward ratio for taking the short position right now. And the risk is this, that market, as I said, could move to the upside and finally complete this fifth wave pattern inside of the and form this bearish wedge pattern. That's why the idea of taking the short position right now, it's not very fascinating for me. I could think about it if market really will complete this target and stands at this resistance and complete the pattern inside of the wedge pattern. That could be quite other tune, but right now it's not very attractive for me personally. Well, that's all in fact that I would like to say about the gold market right now. So we continue to watch for appearing of the head and shoulders patterns on the daily time frame chart, and simultaneously we continue to watch for how market will behave in this last quarter of this wedge pattern, whether it will show another spike up or start to form the right shoulder right now.